Hey traders, this is Blake Morrow with Traders Summit, and with me today for the very first time one-on-one is Mr. Grega Horvat. How are you, Grega?
I'm very good. Always when we are talking about the markets, I'm excited. So
yeah, I'm excited too. I'm really excited, and I like to tell people that with the way you do analysis, Elliot Wave analysis to me is one of those types of analysis that it doesn't really jive with me as a trader, and it hasn't over the years. So I really like to rely on experts like yourself to give me a good view of what they're seeing. Sometimes you can look at the markets and you can look at pattern recognition, like for me, and I can go, oh, there's a setup there, there's a setup there for this reason, that reason. But Elliott waves, sometimes, I'm like, what wave am I in? I don't really understand. So tell us as traders, why and what's so attractive about the Elliott Wave principles, and why does it resonate so much with you as a trader?
Well, I think that Elliott Wave theory is popular because everyone thinks that it's very easy and fast to learn, right? But It's actually not only that. Whenever you're looking at the markets, as you know yourself, it's just not drawing lines or counting to 5, but you have to consider the sentiment, the macro, the data, the timing, and everything has to be linked together actually to recognize if maybe some of the Elliott Wave patterns will suggest that this is a top or that this is a bottom. And usually Elliott Wave theory is useful because it helps us to identify if we are at extreme of pessimism or extreme of optimism. So what the Elliott Wave theory actually is trying to find the spot where are we at the market at current, based on current situation that fits into the higher degree scale. Okay, so Elliott Wave theory is actually can be complicated, but we should look at it much more in simpler way. I mean, you should identify the direction and just identify a correction. Don't get frustrated by subwaves, substructures. It's very important to zoom out a little bit, look at the markets from a distance and remind where we are in a higher degree scale. And I think that the Elliott waves in such case will be much easier to read. I mean, one example of Elliott waves of extreme optimism was several times, as you know, on cryptocurrencies, on Bitcoin specifically. So these are type of the patterns and sentiment which actually can be very helpful to predict what is going to happen next based on these Elliott Wave extreme readings and patterns.
Okay, well, it's I guess as a trader, I think all of us as traders, the natural inclination, we hear trade with the trend. The trend is your friend. That's obviously something, the saying that's been around, way longer than you and I have ever been in the markets, even outside of, for forever and ever and ever. But as traders, we have a natural inclination or a desire to pick a top or pick a bottom. So to maybe sometimes trade counter trend. So let me ask you this: in Elliott Wave principles, are you trading with the trend, or are you trading counter trend, or can you do both?
I always say this: no matter how high the market is, always try to level the wave count so that fits to a bullish picture. If you have a very strong downtrend, always try to count the wave count, to level the wave count so that it fits to a bearish picture. It means that if we see market, even it's at some extreme levels, and you think this is going to be a top, well, don't say that this is going to be the multi-decade top or something. Just level it as a wave 3, expect a wave 4 pullback, meaning you can still be bearish, but just not that aggressive. You can expect a pullback, and then you will see again a new step higher, because that's how actually Elliott Wave works. You just always have to respect the trend and be aware that not every top is a top, because after all, if you will always try to level, I mean, in uptrend, bullish wave count, there's much greater probability that you will be correct after that pullback, that market will continue higher rather than much lower.
Well, that's, I'm glad you framed it like that. And so can you give us a couple of examples? I mean, well, when I say give us examples, I want to look at some live environment, kind of what you're looking at. I know since you and I talk pretty frequently, we've had this, nice setup in the S&P. We've seen the S&P actually find some sort of low, and it looks like we might be coming into some resistance. How are you viewing the S&P right now? And can we take a look at some of your charts?
Yeah, let me just share the screen. Okay, so actually, as I said earlier, I don't want to call any major top, right? That's my first Elliot wave rule, okay?
Yeah.
So here on the left, you can see I have one wave count where I'm looking at the wave 4, now already tested the first support here at 42.70. That's actually an ABC flat formation, okay? That's one wave count which has a bullish interpretation, meaning that there's still a chance for a wave 5 to push back to new all-time highs.
Okay.
And then here on the right, I have another wave count, okay, showing us an impulse still in progress, but now you are just pausing for this wave 4, which could also be made by 3 waves, since this third wave is a little bit more extended than on the first wave count.
So as a trader, when you're looking at 2 different potential wave counts, how do you know which one to fit the current narrative in, or based on the current environment? I mean, we're obviously looking at the same price right now, where the market's at currently at 4,400 based on your charts. So am I going to interpret the count on the left or the count on the right? Number one or number 2?
We are traders. So if we are traders, we really have to be open-minded and just be aware that anything can happen. Okay, so that's why I have different wave counts. But when the market confirms one of the wave counts, that's when I actually will be able to pull a trigger. For example, at the end of the year in December, I've been looking for this wave B rally to a new high, and even been looking at this wave count for an ending diagonal in wave 5 or 3. So back then, I had 2 different wave counts, but both suggested that we will see a limited upside and potentially a slowdown into a larger pullback. So when I have 2 wave counts, the best thing is to wait on a price action where different wave counts shows you the same direction. Okay, and now let me go to this smaller time frame. Firstly, before we go to the 4-hour chart, let me explain that flat correction is a 3-3-5 pattern. What that means, that you have 3 waves down for a wave A, 3 waves up for a wave B, and then you need 5 waves down for a wave C, right? So, and now let's assume that this wave count on the right is the right approach, meaning that you will see more weakness into this deeper wave 4, and you are now then, just a second, and you are now then in wave A, B, and C. And what is interesting and the most important is that wave C must be made by 5 waves, or even if it's wave A, must be made by 5 waves. And if you look at the 4-hour time frame here, well, notice that we don't have this 5 waves down from the highs. So I'm looking at 2 different wave counts, but both in the near term suggest that we could potentially see more weakness in the near future, either, as I said, for wave A to complete, or maybe even wave C of this flat correction. Now, very strong resistance for a wave 4 is always around 38.2%, especially when you have wave 3 extended, like in our case. Notice that already the first leg of recovery here was made by 3 waves. So this appears to be a complex wave 4, could be a triangle, maybe even it may see another retest of this resistance here around 44.80 to clear out some stops before we see a sell-off. But always when you're looking at impulses, like myself here on the bearish side, well, wave 4, as you know, must not step into the territory of a wave 1, and that's at 45.80. So for now, I'm intraday or short term, I'm bearish. I remain bearish here on the S&P 500. But if we suddenly would jump back above 45.80, well, that will be an important evidence that either we are just going to stay sideways in this range from December to January lows, or maybe even turn back to the bullish side.
That's great. Now let me ask you this. So at what point do you shift gears and you say, well, You know, the S&P didn't hit new lows. We held above the 42.22, that wave 3 that you have there on the right. We hold that support, and we're going into, it seems like, what is some sort of consolidation. Does if we went into a triangle, some sort of consolidation, does that alter your count, or does your count do you still look for a wave 5 eventually?
Well, if we'll just keep chopping around here, I will eventually just remain bearish for a wave 5, as I said, unless we see 45.80 overlap.
Got it.
That's when we will have to adjust the fuse. But as it looks right now, as you know, the US dollar is moving sharply to the upside. So I think that we should be aware of potential more risk off here.
That sounds great, Grega. Well, give me more. Let's take a look at something else that might be on your radar. Do you see anything else, like, since the dollar's been moving, maybe the euro, some other cross rate?
Yes, I mean, a lot of analysts, traders, everyone is so bullish US dollar, right? They're expecting more upside based on these hike speculations from the Fed this year. But actually, when they will hike, a lot of markets could already be priced in on this move. So I am aware of potential surprise here whenever this happens, okay? I see on the euro, I see market coming to the downside right now into a 5th wave. I see dollar index obviously also rising into a 5th wave. So if we look firstly on the euro dollar here, okay, you can actually see, okay, let me just grab this one. You can actually see that this current breakdown came after a 4th wave rally. Okay, so I would not be that bearish once we breach a new low, because if we are in a 5th wave, well, that's an important indication for me that maybe not just yet, but in the next week, 2 weeks, well, we could be slowing down. So when a lot of traders are becoming aggressively bearish on the euro dollar, that's when Elliott Wave theory can actually show its strength, especially if the sentiment is going into some extremes, because that's Elliott Wave is all about. It shows us when this extreme is in late stages, and we know what this means for the next cycle. Probably that the market will change a direction. Of course, this may not happen immediately here, but I'm just aware of potential slowdown, let's say around 1.1 figure, and then we rally at least in 3 waves. Okay, so I think that the easiest part for this current move is, based on prediction, is already gone. Okay, it was obviously when this market made a 3 waves up and we have seen a reversal, I was continuing looking lower for a wave 5. But now we have to be, in my opinion, very, very careful, because after all, you have this already 300, almost 400 pip move. So as you know, we could again stabilize a little bit.
That makes a ton of sense. Well, Grega, I love your work. You know, obviously I'm a big fan. Forex Analytics has been working with you for many, many years now. But if I'm a trader and I'm just watching you for the very first time and I'm like, who is this Grega Horvat person? How do I find out more about you? How do I follow your work specifically?
Well, we have a website, wavetraders.com. So let me just share. So we have wavetraders.com. We cover a lot of currency pairs and also some important markets like crude oil, metals, S&P 500, DAX. And we also cover cryptos because there was a lot of requests for cryptos, and we just decided to launch this service as well. It's a very important market, which obviously is going to stay here. And I think that even on this market could be some very interesting opportunities in months ahead.
That's awesome. All right. Well, Grega, you know, for those people that are listening at home, if you like what Grega's doing, make sure you give him a thumbs up on YouTube. This way you're telling Grega, hey, I really appreciate your work and what you do. And make sure you also subscribe to our channel so you don't miss any of our free content that we put out here on Traders Summit. Grega, thanks for joining me today. And we have to make this more of a common occurrence. I love having you on here. I love hearing what you have to say, and I love watching your work. So thanks for joining us today on Trader Summit.
Thank you very much, Blake. Hope to see you soon.
See you soon.
Bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.